All right, well, welcome back to the iWealth podcast. Today we got Brad, and we're talking about Q2 of 2024.
Yeah, amazing. We're halfway through the year already, Matt. 2024 has been an interesting year for the market. It's a similar vibe to what we had in Q1, meaning S&P was up about 4% for the quarter, which is great. I mean, the S&P, if we could get 6, 7, 8% every single year, it'd be great. So for the quarter, it was up 4%. But it's really driven by the information. So this AI boom has continued to drive what's going on. You look at energy, financials, healthcare, and industrials, 60% of the S&P 500 stocks ended in the red. So 40% were green, 60% in the red, but the market's up 4%. And I've written about this, I've spoken about it, but what people need to understand is when you look at the S&P 500, which is 500 large company stocks, you have to understand that the typical S&P, when you see it like on the news and you see it up or down, that is not equally weighted. So it's not 500 companies equal. It's overweighted right now by technology stocks. And so when NVIDIA and Google and Tesla and Apple, Amazon, when those things are going through the roof, they can hold up the performance of the S&P. So if you own the S&P 500 in your 401k, let's say, and you own the S&P 500 fund, you're up 4% last quarter. But if it was equally weighted, it's probably up 1% or so. And it's because of the technology stocks. And so I think it's super important for people to understand that, yeah, we had a great quarter, but if you're owning the market, make sure you understand what you own. Mm-hmm. Does that make sense?
Totally. And so another thing too that's happening right now with what you own is we're coming up on an election.
Yeah.
And tell me a little bit about your vibe or your thought on that.
Yeah, well, we're not going to get.
Who are you voting for?
Yeah, we're not going to get into politics and get in trouble here. But seriously, when it comes to elections,
what's the rule of thumb?
The bottom line is it doesn't matter.
Okay.
So interesting. I'll have Democrats say, well, if the Democrats, it does better, and Republicans. Here's what matters: divided government. So people should pay attention to whether the Senate, the House, and the presidency is all one-sided, or if a divided government like we have today. You have you have a Democratic president, you have a Senate that's Democratic, and then you have a House of Representatives that's Republican. It's hard to get legislation through unless it comes to the middle. Yep. So it makes sense in context. So yeah, I mean, as we sit here in middle of July, you've got the assassination attempt on Trump. You've got Biden just stepped out. Is it Kamala Harris? Like, who's going to be the person running? It's super interesting to take a look at what's going on with the market. So there's been some volatility around what just happened over the last 20 days, let's say. They call it the Trump trade. So, after they felt like the market felt like he was going to win, there were some different parts of the economy that traders start to go after and say, well, this is going to get better. Like, we're going to have less regulation, so maybe we should look at oil or something like that. Mm-hmm. But the bottom line is that it just doesn't matter. Just hopefully, what I'm more worried about is the unrest, the global unrest that we have that's going on around the world. And then here, when you look at the assassination attempt and things like that, like, I'm more worried about that than I am about who's going to get elected in November.
Sure. Is there a rule of thumb about, like, if it's an election year, it typically goes up?
Yeah, so history says that the market is up in an election year, and it's because everybody's trying to get elected. So if there's stuff that's passed, it comes to the middle, and it's good for the people. And they're not going to get any wild and crazy things. Like, taxes aren't going to get raised or lowered this year. Your health care is not, like, those big ticket items are off the list. So the market likes it because they know exactly what they're dealing with. So election years are typically good for the market, and we've seen that. But just since you've got, everybody's watching, since you've got your statements last quarter, there's been a lot of volatility, and we've been talking about this volatility coming. This rotation's happening. So the Russell 2000 is 2,000 small company stocks versus the S&P 500, which is 500 large company stocks. The rotation is happening where over the last 10 days, you've had small cap stocks outperform large cap stocks. So you're starting to see some profit taking in some of these technology companies that we talked about, and you're starting to see them rotate into small cap stocks. The other thing is value stocks, so stocks that make good income, that pay a good dividend, they've been out of vogue. It's been stocks that are more growth that have been in vogue. And that sector rotation, I think, is happening as well. So it'll be interesting to watch. We think there's some buying opportunities this summer because this volatility is here. It looks like the Fed's going to raise interest rates once or twice this year. That's the consensus. Cut interest rates once or twice this year is a consensus. So if the Fed cuts, unemployment's gone up a little bit. That's good for the Fed to cut. I think we're on pretty good footing, but just expect volatility. Like the market, as we're talking, the market's down 400 points today. Like there's going to be more of those days, and we haven't had a lot of volatility lately.
Kind of been up and up. So what else do we need to know about Q2?
Yeah, so basically good quarter.
Okay.
Bonds were flat, a little bit up, so they were vanilla, which is fine. Understand that cash is still paying 5%. Money market accounts are paying 5%. That's a good thing. Mortgages have been stable, and the S&P 500 is just out of balance. People just need to understand that point. And if you own it, you need to maybe look at an equal weighted or do something different, rebalance your portfolio from that standpoint. But overall, we had a really good quarter, and we think we're going to have a good year, and we think we're into the next bull market. So volatility is here to stay. Presidency don't matter, and just just keep your head down and keep putting money into your accounts, and 10 years from now they'll be okay. That's kind of the old same old.
I like it.
Yeah.
Anything else fun that we should know for this Q?
No, it won't be long. We'll be doing Q3.
Well, that puts that one in the books. We'll see you back here next time on the iWealth podcast.